To start investing in the S&P 500 Vanguard, you need to understand what it is and how it works. The S&P 500 is a stock market index that tracks the performance of the 500 largest publicly traded companies in the U.S. Vanguard is a renowned investment management company that offers a range of low-cost index funds and ETFs that track the S&P 500. The first step is to open a brokerage account with a reputable online broker such as Vanguard, Fidelity, or Charles Schwab. This will give you access to a range of investment products including the S&P 500 Vanguard Fund. You can open an account online by providing some basic personal and financial information. Once your account is open, you need to fund it with money to invest. You can do this by transferring cash from your bank account or by setting up a regular investment plan. The minimum investment amount for the S&P 500 Vanguard Fund is typically low, making it accessible to investors with limited capital. Next, you need to choose the specific S&P 500 Vanguard Fund you want to invest in. Vanguard offers both an index fund and an ETF that track the S&P 500. The index fund is a mutual fund that is traded at the end of the day, while the ETF is traded throughout the day like a stock. Both options have similar investment objectives and low fees. To buy the S&P 500 Vanguard Fund, simply log into your brokerage account and navigate to the trading platform. Enter the ticker symbol for the fund you want to buy, which is VFIAX for the index fund or VU for the ETF. Enter the amount of money you want to invest and confirm the trade. It is essential to have a long-term perspective when investing in the S&P 500 Vanguard Fund. The stock market can be volatile, and it is not uncommon for the value of your investment to fluctuate in the short term. However, over the long term, the S&P 500 has consistently provided strong returns, making it a popular choice for investors. Finally, it is crucial to keep costs low by choosing a low-cost investment product like the S&P 500 Vanguard Fund. The fund has an expense ratio of 0.04%, which is significantly lower than the average expense ratio for actively managed funds. By keeping costs low, you can maximize your investment returns and achieve your long-term financial goals.